All right, let's jump right in. We're going to tackle 5 critical questions that entrepreneurs always have about business loans. First up, the big one. How much money can you actually borrow for your business? Let's break it down. Well, for working capital, a solid rule of thumb is about 2 months of your gross revenue. So let's say your business pulls in 100 grand a month. You're likely looking at a $200,000 loan. And how do they figure that out? They average your last 6 months of deposits. It shows you're stable. But remember, that's for working capital. An SBA loan, totally different. That's based on acquisition cost. Okay, next question. Let's talk repayment. How long do you actually have to pay it all back?
You'll see terms as short as 6 months, all the way out to 60 months. That's 5 years.
But listen, the real sweet spot for the best rates, that's usually in the 12 to 18-month range. All right, let's get serious for a second. What are the real risks when you take out a business loan? Honestly, the biggest risk is just taking the wrong kind of loan. It can literally cripple your business. Think about it. Mismatched payments, misspending the funds, it can lead to some really unmanageable debt. So the key is having a rock-solid plan. Know exactly how that capital is going to make you more money. Now, a question we get all the time, what's the absolute easiest business loan to actually get approved for? That's easy, a working capital loan. They're super fast, super effective, and often fund within 24 hours. And the requirements? They're really simple. You just need these 4 basic documents to get the ball rolling. Yeah, a 580 credit score helps, but what lenders really care about is your strong, consistent cash flow. Last question, and this one's a big one. Can you use a loan for something specific, like new equipment? Yes, and here's the kicker. Being specific can actually save you a ton of money on interest. So let's compare. Equipment financing has lower rates because the equipment itself is used as security for the loan. If you don't pay, the lender takes the asset. That means less risk for them and a lower rate for you. So look, now you know the how of getting a loan, but the real question is your business ready for the why?